Hey there folks, David Floyd here with Aspen Trading Group. It is Monday, April 29th. It's just after the New York close, and we've got quite a bit to get to in this week's Big Four. I'm going to start off with usual, the S&P 500, and we had a really interesting session today. We had levels that were breached on both the bullish and bearish side, and then by the end of the session, we went back to the bullish side. So we still have a market that is quite indecisive, at least on a intraday short-term basis. But based on today's close, kind of leaning into tomorrow's session, assuming that the earnings come out okay over the next few days, as from a technical perspective, I'm coming in as bullish. So let's take a quick look. Pretty straightforward here. Today's session, as I said, this is a 2-hour chart. So, but we could see, in fact, let me actually have to circle these. Coming into today's session, it was 51.48, this orange level right here, this orange Aspen SR level. And the lower band, or the lower support level that I was looking for, was down in the low 51, 51.32, 51.34. And then the low we got down to was about 51.16, and we rebounded. But these two levels right here, this 51.48 and this 51.32, really dictated price action today. Once we dipped below that 51.32, it looked as though the bears had a chance. They ripped them right back. Earlier, actually even earlier in the session, we broke above 51.48 and then took those down to 51.32 and a little bit lower. And then into the close, we had this big rally, as you can see right here. Well, probably can't see it as easily, but I'll blow it up just a little bit here. Big rally into the close. Now, we didn't quite close above 51.48, but the bottom line is that's a pretty bullish bar right there. But the bottom line, though, this price action in here is very indecisive. It wouldn't surprise me if we broke up or down from here. But we have to go with the path of least resistance, and based on what we know right now, the path is higher. We keep moving upward and to the right. Anybody with half a brain knows that that is an uptrend. We're not going to try to fight that unless we get key levels to break. That level being probably around 51.24, 51.25, and certainly into this 51.16 level right here. This would be the level that would get me to go more bearish on the market. But the way we closed today, it looks as though we're going to get above this 51.48, maybe give a retest. And my immediate upside is going to be 51.87. So there you have it. That's how we're going to navigate for the next few days. Obviously, things can change between when I post this, which will be tomorrow morning, Tuesday morning. I'm recording this on Monday afternoon. Things can change, but as of right now, I'm leaning bullish above 51.48 with an immediate upside target of about 51.80. I would take profits there and probably leave a runner on. Anything below 51.16, that's when you got to start considering maybe being a bit more bearish on the S&Ps. All right, let me shrink that back up, and we're going to go to 10-year notes. Again, probably just going to stick with the overall trend, which clearly is to the downside. We've had this big cluster of support right here. And given the fact that we've, and that support's in and around the 107.20 down to a 107.15 level, given the fact that what I'm seeing here, triangle that broke, being retested, I think the path of least resistance is down towards 106.19. I don't think you need to overthink it anything more than that. I think if we get back above, let's say 108.09, the bullish bets are off, or the bearish bets are off. That doesn't mean I've become a raging bull, but I've gone from, let's say, bearish to neutral and possibly looking for long opportunities. But I like the way things are setting up right here, so I'm going to be leaning bearish on 10-year notes, looking for a downside target into the mid 106s. I'd be remiss if I didn't check in with dollar yen based on the intervention. I don't have updated levels here, so you're going to have to ignore the green and red levels. But here's where some serious intervention came in. Whether or not they hold it, that remains to be seen. I'd like to see us get back down into the 152s. That might be a tall order, but if the BOJ really comes in with guns a-blazing, going down to 152 is not out of the question. No position, just observing. However, how dollar yen moves will be very indicative of how 10-year notes move. If we see rates start to bump higher in the US, which based on the 10-year note chart I just showed you is not likely. But if it was, then you're going to see dollar yen come off even more, because that would be, you know, when you add the Bank of Japan intervention plus potentially higher rates in the US, that's going to push dollar yen lower. I'll probably circle back to this one with a different video or an update specifically for clients, but I'm just putting this up there for observation at this point in time. Moving along, euro. Very simple analysis here. I'm looking for a continuation of the downside. It's really simple. There is too much overhead God, can't even draw squares today. I'm looking at this cluster of longer term resistance levels at 108.20, 108.40, 108.75. You know, I'm looking at Fibonacci resistance based on this thrust lower a week and a half ago. And now we're moving up in a corrective manner. The path of least resistance is to the downside. I say if we get below 106.95, 106.90, then we're going to start to accelerate to the downside. So pretty straightforward setup right there in the euro. Last, certainly not least, there he is, Aussie dollar. This one's a little bit more tricky. This has been a pretty solid move off the lows, but we're coming into some resistance, Fibonacci resistance, as well as some standard deviation levels. And of course, we've got these big longer term Aspen SR levels hanging just above. I don't really know what to do with Aussie dollar right here other than keep an eye on it. I don't see an obvious trade setup right here, but here's what I do see. If we were to break a little bit lower, because I'm still favoring the downside overall. If you look at the longer term price chart, this is just a move within a longer term downtrend. So if we can break this trend line, and if we were to get some weakness in the S&Ps, then I might be inclined to sell a break of 65.50, maybe down towards 65. Then if we break that, then we're going lower. Right now, I'm in observation mode. So I think you'll take a theme away from this week's Big Four. Watching patiently. I see setups in the euro. I see a possible setup in the Aussie dollar. I see a possible setup in 10-year notes. And I've got a bullish. I'm a little bit more conclusive on the S&P 500. I think they will run higher unless they don't. And I know that sounds like a complete cliche, but it's the absolute truth as a trader. We're not here to forecast per se. We're here to get on board with what the market's doing. Right now, the market's leaning bullish, but that could change very quickly because, as you've noted, the recent sessions have had a lot of back and forth price action. So until next week's Big Four, thank you very much for watching. Please subscribe to the channel. Please let your friends know about it. This is David Floyd with Aspen Trading Group. Have a great day.